If you're looking to add exposure to your portfolio, just be a little bit patient here. We're holding a little bit extra cash in our portfolio right now. We're going to just be patient here, wait for this market to relax a little bit. It could just be a little bit of a sideways correction or something to that degree, and then you'll have a better opportunity to put capital to work. But just jumping in and buying today, you're likely going to buy a little bit high here, and if you'll be a little bit patient, you'll have a little bit better entry point. So here's what you need to know before the bell. Couple of things yesterday important from a technical perspective. First of all, we are now very, very overbought in terms of the relative strength index. So that is suggesting that a lot of this rally from these recent lows has likely been priced into the markets. Now, markets can stay overbought for a while, but generally when you get overbought, markets are going to start to have a little bit more difficulty rising higher from here without a bit of a pullback first. Now, that doesn't mean the market's going to retest lows. The potential to retest these lows is likely very low now because of what's happened in the markets. Secondly, though, momentum is now extremely overbought. So we've got two very kind of simultaneously overbought conditions. And again, this doesn't mean the market's going to crash. Just means that you're probably going to get a pullback here to some point. So if you're looking to add exposure to your portfolio, just be a little bit patient here because we're holding a little bit extra cash in our portfolio right now. We're going to just be patient here, wait for this market to relax a little bit. And it could just be a little bit of a sideways correction or something to that degree, and then you'll have a better opportunity to put capital to work. But just jumping in and buying today, you're likely going to buy a little bit high here, and you'd get a little bit better. If you'll be a little bit patient, you'll have a little bit better entry point. So let's talk about where some of those entry points are going to be, because that's going to be the real question here. So yesterday we broke above the 200 and the 100-day moving average. So we took out really heavy resistance yesterday on that rally, on that news about the Chinese tariff. So we took out a very important technical structure there from that standpoint. So the important thing, though, is that just because we broke above it yesterday, we have to hold it now. So again, that's just because you were up above it for one day, that doesn't constitute a break, so to speak. You need to hold it. Again, if the market just completely fell apart today and went back below it, that would invalidate that breakout. So again, we're up there. We got through all. It's been an amazing rally, no doubt about this. It's been very advanced at this point. Really good running trend line from the lows. We've taken out every single level of resistance without any trouble, which has been a very important part of this market cycle. The breadth of the rally has been very strong. The number of stocks trading above their 50 and 200-day moving averages is back above 50%. The relative breadth, if you take a look at the S&P equal weighted versus the market cap weighted, it's been outperforming for the last 6 sessions, so suggesting that this has been a very broad rally, of course, and that's healthy for the markets. So we've taken out every single level of resistance here without any trouble whatsoever. So that just really shows you there's been a lot of buyers coming into the markets. Next level of resistance, honestly, is just going to be all-time highs. So there's not a lot to really stop the market from here to there at this point. But again, just with markets overbought here, look for a bit of a correction. So first level of correction is just going to be kind of holding above that 200-day moving average around 57.50. So if the market can kind of come back and just kind of bounce along that 200-day moving average, hold that level of support without breaking it, that would certainly be good. Right below that is going to be this cluster this cluster of price action and the 50-day moving average. So any pullback back to this, kind of 5,600 to 5,700 range that holds, and the market kind of just consolidates in there and then moves back above that 200-day moving average, that's going to be a good sign that you've had a really kind of both a confirmed breakout to the upside, but also that pullback will give you a better opportunity to add to exposure that you want. And we're going to get some of that. Right now, we've got a lot of corporate buybacks that's helping support this rally. Market could certainly rally higher here over the next couple of days. But again, if we can just come back, retest that 200-day moving average, hold that, that's going to give you a decent entry point to add a little bit of exposure. So you're just looking to work off some of this really kind of overbought condition to put some capital to work here. But again, this market is probably going to go higher here over the rest of this month as buybacks are fully engaged. Once we start getting into summer, a little bit different story. But that's what you need to know before the bell this morning.